Here with Dom Giuliano, Portfolio Manager of Magellan Financial Group. Thanks for joining us, Dom.
Pleasure.
Shooting down of the Malaysian Airlines plane recently has put a lot of focus on Russia, Ukraine, and particularly the sanctions from Western countries and Europe on Russia. So we were just thinking, we're just looking for whether or not the sanctions that are likely to be imposed on Russia is an investment event that the investors should be mindful of, and whether it's likely to cause damage or whether it's just noise. I'm just interested in your view, given your focus on Europe.
Yes, so Russia is certainly one of the larger emerging market countries out there, and they do undertake a significant amount of trade. And they also have been, they have been a fairly open economy in terms of accepting foreign multinational investment, business, etc. And so certainly some of the companies that we look at, for instance, have extensive operations in Russia. However, those operations need to be thought about in the context of the wider group. So if you think about a Visa or a MasterCard, for instance, in which we have investments in, Russia contributes less than 2% of revenues, right, and even less of profitability. So yes, there is an impact in terms of revenue impacts and margin impacts, but it really is at the margin. There's some other companies that we own and invest in, companies, if you think about McDonald's, Danone, they have also operations in Russia, but then again, you also have to think about them in their global context. Both companies, as you know, are very large multinationals and have extensive operations throughout Europe, emerging markets generally, and North America. Yeah. So you do have to think about the operations, the materiality of them. You also have to think about the nature of the operations in those countries. Yeah. So for instance, do you sell into that country and the inputs into the product are produced within the country, so you don't suffer from FX, foreign exchange translation impacts, or are you importing materials into the final goods into Russia, which actually does have an adverse impact on those businesses. Right. So particularly after the ruble's gone down significantly. Okay, so I think the message here for your listeners and clients is that you do need to think about Russia, but in the context of the global portfolio, it should be a relatively minor part of the overall portfolio. In terms of consequences for economies in general, look, Russia is a major trading partner to Europe. Yeah. And the trade that tends to happen is commodities out.
Yes.
So think natural gas and oil.
Yep.
And finished products in. So think about BMWs and Mercedes and Danone products, medical products, healthcare, all that kind of stuff going into Russia. But again, here you have to be a little bit contextual. So if there was some serious conflagration, something which blew out beyond our current expectations and what you're seeing in that part of the world, yes, there would undoubtedly be spillover impacts into places like Germany, Italy, etc., both on potentially higher import costs on commodities and also reduced exports. But let me put this into context. Even for a country like Germany, Russia is, I think it's 11th largest or 10th largest export market. Right. Okay, and 7th largest import market. Yeah. Okay, and again, what's being imported in is energy, and it's a commodity. You can substitute it ultimately. Yeah. So things could get a little bit rocky. It could impact on sentiment, but let's just keep that into context in terms of what it might mean globally, and more particularly to Europe and its major trading partners around Europe. Yeah.
Look, thanks for that. I think that's really useful information, particularly keeping in context of what's going on. Yep. So appreciate your time, Tom.
Pleasure.